Who profits from permanent crisis? Well, there's a phrase you hear constantly now: uncertain times. Geopolitical uncertainty, economic uncertainty, energy uncertainty, AI uncertainty, supply chain uncertainty. Well, here's the question almost nobody asks. What if permanent instability is not a side effect of the system? What if it's becoming one of the system's most profitable business models? Because if you look carefully, some of the large publicly traded companies on Earth benefit enormously when the world becomes more unstable. Not necessarily because they cause the instability, but because modern capitalism monetizes response to instability at every level. Let's start with defense. Every time geopolitical tensions rise, money floods towards the same companies. Lockheed Martin, RTX, Northrop Grumman, General Dynamics, just to name a few. These firms operate on long-term government contracts worth hundreds of billions of dollars. Rising global tensions increase defense budgets, missile production, cybersecurity spending, satellite infrastructure, and weapons procurement, again, just to name a few. So let's now think structurally. A peaceful world economically is inefficient for large portions of the defense sector. But a tense world? A tense world creates recurring revenue visibility, and Wall Street loves visibility. That is why defense stocks often rally, not despite instability, but because of it. And again, this does not mean wars are secretly orchestrated by corporations. That simplistic thinking misses the deeper point. The point is incentives. Modern markets reward companies positioned closest to government spending during periods of fear. That's the mechanism. And now let's move to finance. Most people assume financial firms hate volatility. Retail investors hate volatility, but certain institutions thrive on it. Now look at firms like Blackstone, Apollo Global Management, KKR, Ares Management, and Carlyle Group, again, just to name a very select few. These firms specialize in private credit, distressed asset, infrastructure, real estate, and opportunistic acquisitions. Translation: they are structurally designed to deploy capital during dislocation. When ordinary investors panic, alternative asset managers go shopping, usually at a big discount. And that's why many of these firms are sitting on enormous pools of deployable capital during unstable periods. And notice something fascinating. Retail investors often retreat during fear cycles, while institutional investors increase exposure. That should tell you something important. Sophisticated capital often interprets instability differently than the public does. The public sees danger. Institutions see repricing. And now let's talk about private credit. Most people have never even heard the term, but private credit may be one of the biggest hidden stories in modern finance. As traditional banks pull back from risk, private credit steps in. And firms like Apollo, Ares, Blue Owl Capital, they've built enormous businesses lending into stressed or illiquid environments. Why? Because instability increases the price of capital, and whoever controls scarce capital during unstable periods becomes extraordinarily powerful. And that has always been true historically. Now look at energy. Every geopolitical flare-up involving oil routes, sanctions, pipelines, or Middle East tensions immediately affects companies like ExxonMobil, Chevron, Shell, and BP, just to name a few. Why? Because instability increases the value of energy security, and energy security has become one of the defining strategic obsessions of the modern era. And that's why wars, sanctions, and supply disruptions frequently translate into massive energy profits. Now, here's where things become more subtle. Who profits from digital instability? Well, first, cybersecurity firms. Every ransomware attack, every infrastructure breach, every AI fraud wave, every geopolitical cyber escalation drives demand towards firms like CrowdStrike, Palo Alto Networks, and Fortinet. Fear creates spending urgency, and urgency creates pricing power. Notice a pattern yet? The modern economy increasingly monetizes defense against instability. Not just goods and services, protection itself. Physical protection, financial protection, digital protection, narrative protection. Now, think about the media. Outrage is profitable. Fear is profitable. Conflict is profitable. Financial media profits from volatility because volatility drives engagement. Social media algorithms amplify emotionally destabilizing content because human attention gravitates towards perceived threats. And that is not conspiracy, that's behavioral economics meeting advertising models. And once entire industries become dependent on attention, society gradually becomes optimized for emotional activation. Calm populations scroll less aggressively. Now, here's the really important distinction. Saying certain companies benefit from instability is not the same thing as saying those companies create every crisis. That intellectual jump is where analysis becomes paranoia. Complex systems produce instability naturally. Debt cycles, political incentives, technological disruption, resource competition, human psychology. But once instability emerges, capital flows towards whoever is positioned to absorb, finance, secure, weaponize, or manage the response. And that's the real mechanism. And the companies closest to those flows often become enormously powerful. And that's why you're seeing such concentration now. Mega cap tech, mega cap defense, mega cap finance, mega cap asset management. Scale thrives during uncertainty because smaller players struggle to survive volatility. And that may be the defining economic trend of the next decade. Permanent crisis normalization, not collapse, not apocalypse, just continuous, low-grade instability. Enough fear to centralize power, enough uncertainty to justify intervention, just enough volatility to create opportunity, but not enough to fully break the system, because modern systems do not necessarily seek equilibrium anymore. They seek managed instability. And the people who understand that stop reacting emotionally to headlines. They start following incentives instead, because incentives explain more about the modern world than ideology ever will. And now you know the rest of the story for who profits from permanent crisis and why. Build that stack. iBankerU. Good day